Hello students. So very good morning to all of you. So students, just give a confirmation quickly. So students, let's start with the today's session. Good morning, Pawan. Chandana, Priya. Good morning to all of you. So students, now today's session we all are focused towards this very important area. One, I can tell you students, either 10AA or AMT or the combination of 10AA and AMT, both of them, either of the three of them, what I told you, either a 10AA question or an AMT question or a combination of 10AA and AMT question will be there in the exam. Good morning Prasad, Trinath, good morning Priya, Pavan. Good morning to all of you. So that is how you will be getting the questions in the examination. So therefore, in all probability students, we will try to focus upon those particular areas carefully. Now we shall start then with section 10AA first. The yesterday session we have already discussed now all the big deductions, which is essentially allows you the deduction of the capital expenditure was our target, isn't it? And also we have seen certain practical areas as well of that particular chapter, and on that basis we have made our final conclusion, primarily about how the deduction would be available, is there any conditions in respect of the deductions, and other incidental areas. So today, before the small deductions are now there in the sequence now, which we will be dealing with it, there are some small deductions which are there. But as I told you before, we can invest ourselves in these small deductions and the disallowances, we will immediately switch over to 10AA and AMT. Immediately we'll switch over to 10AA and AMT. So these are the small deductions which are there, students, to be considered. But we shall first focus upon 10AA and AMT. Okay, let's get started with this. So As per the yesterday's your module references which you have given to me towards the end, the module references that all of you have given it to me, we will look into that as well. But let's first take the chart. In our chart, this section should be section 10AA. In the chart, students, good morning Nishank, would be section 10AA. Now students, that is for quickly we will understand this concept. This 10AA deduction, students, which is there, it is a profit linked deduction, meaning thereby you get the deduction on the profit of the eligible business. Profit of what? Profit of the eligible business. So you will say, sir, what is this profit of the eligible business? So students, what you need to do, you need to set up your unit in the SEZ. You need to set up your unit. Where you need to set up your unit? In the SEZ. So the fact that you will set up your unit in the SEZ, that very setting up of the unit in the SEZ will result into that very setting up of the unit where in the SEZ, primarily from that there would be a profit that will be arrived. There would be a profit that shall be arrived, and in respect of that profit of the unit which is situated in the SEZ, whatever is the deduction that we will be calculating, the deduction will be calculated as per section 10AA. As per section 10AA. Now students, section 10, this SEZ unit, essentially what they do, as the name suggests, special economic zone, this SEZ unit, students, are mainly meant for doing the export. Mainly they are meant for doing the export. So the entire thrust of the government is to promote the export of the goods and services through the SEZ unit, so as to boost our foreign currency reserves. So as to boost what? Our foreign currency reserve. So we use the SEZ as a medium for the purpose of undertaking the exports of our goods as well as the services, so that the reserves can be boosted up. And on that note, students, herein the deduction, the consequential deduction is also being provided to you in section number 10AA. The consequential deduction is also provided to you in section 10AA in respect of the profit that will be determined by this particular SEZ unit. So this section will tell you how much of the profit will be allowed for the purpose of deduction under section 10AA. So this section will teach you how much of the profit that will be allowed for the purpose of deduction under section 10AA. Let's then get started with this particular discussion now. So students, herein, so eligible person, who is the eligible person in this case? The eligible person, students, in this case happens to be entrepreneur as per the SEZ. Eligible business, the one who is manufacturing, the article of providing the service and what? And export of such article, things or services. And the export of such article, things and services. Good morning Priyanka, DSB. Good morning. So an export of such articles, things and services. So you need to manufacture as well as you need to export. You need to manufacture as well as you need to export. These are the twin particular conditions that should be satisfied. Okay. Now below this, deduction, students, available is for 15 years. 15 years the deduction is available. But how much deduction would be available in 15 years? Depending upon, that will depend upon at what point of time you are there. Like which is this year in which you are doing the business. So on the basis of the number of years you are engaged in that business, on that basis the quantum of deduction will be calculated. We will see through a practical problem also, don't worry. So quantum of deduction, first of all, students, you have to calculate the qualifying amount. You have to calculate what? The qualifying amount. in this case. Now what is this qualifying amount? Profit derived by the SEZ unit from the eligible export business. Profit derived by the eligible unit, meaning thereby this eligible unit, whatever is the profit that we have derived, multiplied by the export turnover divided by the total turnover. Multiplied by what? The export turnover divided by the total turnover. Now how do we calculate the export turnover and how do we calculate the total turnover? We will see in this case. But whatever is the qualifying amount that you determine as per the formula, whatever is the qualifying amount that you determine as per the formula, in respect of that qualifying amount, you will give the deduction which is either 100%. This 100% students is meant for the first 5 consecutive AYs. This 100% is meant for what? For the first 5 consecutive AYs. So supposingly students, I am in my first 5 years, the SEZ unit is in their first 5 years, then for that they will get the 100% deduction. But if you say no, the SEZ unit is between that 6th year, 6th, 7th, 8th and then 10th, the next 5 years, that will definitely then depend on the question students. You have to read the question carefully, that which is this year of the SEZ coming into existence. Is this year, is it falling in that first 5 years period or the next 5 years period, as the case may be. So we need to see which is this particular year in which the SEZ is into its operation. And as I told you, if it is the first 5 years, then it will be 100% of this qualifying amount. If it would be the 6th year, 7th year, 8th year, you need to calculate, and on that basis you will take 50% only. In the examination students, you will get only this two. In the examination you will get only this two. Third, you will not be getting it at all. If the question is silent, then chances are very high that the question is silent. They don't say anything about which is the year of the operation. So if the question is silent students, then in that case you will take 100% of the qualifying amount. Then in that case you will take the 100% of the qualifying amount. This is how you will deal with this particular proposition. Thereafter students, the word derived and all this legal fiction, you can just try to delete it from your examination point of view. You can just delete this particular aspect, the word derived and the legal fiction part. You can just delete it. You will not be getting this question in the exam. Other issues. Now other issues, what would be covered in the export turnover and what would be covered in the total turnover. So what shall be covered in the export turnover and what shall be covered in the total turnover. So export turnover, amount realized in the convertible foreign currency within 6 months from the end of the previous year. So whatever is the amount which has been realized, whatever is the amount which is realized in the convertible foreign currency within 6 months. So the numerator which is the export turnover, the numerator which is the export turnover is on the basis of, the realized foreign currency, and that realization should happen within the 6 months from the end of the previous year. So if your previous year, as you all know, it is 1920, so you should look into 30th September 2020. By that time, how much of the export turnover has been realized, that particular realized export turnover will form the part of your numerator. But a denominator would be the accrual export turnover and the accrual total turnover. Then denominator, you don't do the realized portion. Denominator which is there, what is denominator? It is the total turnover. Your denominator is total turnover. What do you mean by total turnover? It is the mix of both export turnover plus the domestic turnover. It is the mix of both the export turnover and the total turnover. So that export turnover that you will take in the denominator, please don't take this as on a realized basis. No, the denominator export turnover would be on the accrual basis. You say, sir, what is the logic behind this? The logic behind this is to ensure that the SSC tries to realize as much as possible its export turnover so as to enhance its deduction under section 10AA. The SSC tries to realize as much as possible its export turnover so as to enhance its deduction under section 10AA. If there is lesser amount of the realization, if there is a lower amount of the realization of the export turnover, then that will result into students. That will result into what? In that case, it will result into, if there is a lower amount of the realization, then that will result into a lower amount of the deduction, isn't it? Just think about this. If your numerator is like 100 is your export turnover, but you have realized only 80, so only 80% is what will be eligible for the purpose of the 80% of the profit will form the part of your qualifying amount, and of that qualifying amount then you'll take 100% or 50% as the case may be. So it all depends upon how much you have realized, because that realized export turnover will form the part of what? Will form the part of your numerator. So this is one thing that you can easily make a mistake, so you have to be very careful about it. Now furthermore, students, furthermore, export turnover will also exclude what? The telecom charges, freight, insurance, and this is FTS outside India. FTS full form is fees for technical service outside India. So it excludes what? Export turnover. It excludes the telecommunication charges, freight, insurance, and the fees for technical service which is outside India. So students, also if you see the total turnover, the first one is the same, and the second one, if you talk about it, they further exclude duties and taxes. They are further excluding what? Duties and taxes. So that is the exclusion that they all do in this regard. Duties and taxes, students, is what they have excluded in this regard. Okay, now in this context, students, be careful. In this particular context, you all have to be very careful about this. Students, herein, now depending upon your denominator, depending upon what? Your denominator, which is there, which is your total turnover, and the numerator, which is export turnover, the entire focus is to take only that part of the turnover which is only in respect of the sale of the goods and not in respect of the transportation of the goods. Any consideration which is recovered in relation to the transportation of the goods, or I can say any consideration which is recovered which is in the nature of post exportation charges, which is in respect of the post exportation charges. So if I'm an exporter, do you know, when the export I have done my export the moment I do the loading of the goods in the vessel. The moment what I do what? The loading of the goods in that vessel, that is a ship. Once I do the loading, export is done. After that loading, the ship will move, the vessel will move out of the country, isn't it? But my export is already over. My all headache, my all obligations are already over. Once I do the loading of the goods in that vessel, export is over. So all the other charges which has been recovered by me, like the importer of that foreign country, he will say to me that, look, you are there in that country of export. Yes. So kindly arrange for me the transportations, the insurance, and you bill me for that, and I will reimburse you all this particular amount. Plus he will also say that, look, I also want some technical support in respect of these goods. Whenever the goods will reach to my particular country, and after that I will take that goods to my factory, and I require you to provide me a technical support. So I told that, fine, for that also I will charge you some amount. So I am also recovering that amount. So therefore, while you calculate your export turnover, or for that matter even the total turnover, you will not take into account the consideration which you have recovered after the export is completed. And when the export is completed, the moment I load the goods, where on that particular vessel. And that's exactly how you're supposed to look into it as far as this export turnover and total turnover concept is to be concerned. Fine, students. And if you see, sir, what about the duties and taxes? Will it be there in the numerator because it is to be excluded in the denominator? Will it be there in the numerator? The answer is no. When you do the export, students, be careful. There is no duties and taxes. When you do the export, there is no duties and taxes. In final CA, when you go and you learn GST at that time, you will get this fine tuning about the fact that no GST is charged on the export that has been made. No GST has been charged on the export that has been made. You learn that. Okay, so one thing you should always keep in mind, that there is no taxes on the export. So your numerator is without any duties and taxes. So your denominator, students, denominator may have what? Duties and taxes included in the domestic turnover. The denominator may have the duties and taxes which may be included in the domestic turnover, and that is the reason why these duties and taxes has to be excluded. These duties and taxes has to be excluded while determining the total turnover. Why the denominator may have your duties and taxes? Because it consists of also domestic turnover, and since it consists of also domestic turnover, the duties and taxes has to be excluded, and that exactly how it has to be considered in this regard. Okay, now in this context, students, herein this is precisely how the things has to be considered. Now I think a couple of final CA students have asking some final CA queries and all. I'll just request just to take your queries towards the end, because essentially this is a inter CA session which don't have the queries that you are putting it right now. So I'll take it this particular queries like printing and all. These are all CBDT circulars that you are talking and that we have discussed in final CAs and all. So I'll just, otherwise inter CA students will get frightened. So they will get frightened. So just have some mercy on them. Otherwise, if we discuss that, they will get frightened on that. So students, now I give you a small example herein. Just we'll take one small example and then we'll switch over to what? Switch over to the practical problem which is there in your module. So let me first give you a very simple example. Profit and loss account. So there is a company A Limited. Okay, and the company A Limited has got 2 units, students. One is SEZ and another is non-SEZ. Okay, so they have got 2 units. One unit which is situated in the SEZ, another unit is situated in the non-SEZ. So herein the turnover, so they are making this tax, this is your tax PNL, say for example, and the export, and say this is year 3, third year. Export is say 100, this is 20 for non-SEZ. Then for domestic it is 10, or this is 25, and this is 200. The PGVP is say 30, and say this is 40. Calculate, all of you will calculate the deduction. Under section 10 AA. Quickly. Quickly get into this one, students. Priyanka 24. All the other students quickly will get their answers. Last 1 minute. Chandana also got the same answer. DSB also same answer. Priya. So I think more or less students are getting the same answer. I need to calculate because I also don't know. So obviously I also need to calculate the same. Let's see. So students, herein the deduction which is there would be 100%. The reduction that would be there would be 100% because it is a third year into reduction at 10 AA. Pavan, the profit that you will take would be that of what? Not 70, it would be 30. The profit which is derived by the SEZ unit. Also the export turnover and the total turnover would only be that of the SEZ, not the export turnover and the total turnover of A Limited. No, only of the SEZ that the deduction has to be calculated. And by virtue of this, students, your deduction would be this one. I think it is 24 is what you are telling. So if it's 24 is what you will be getting as a deduction. If this calculation results into 24, I'll accept that. Fine, students. So this is how you will do the calculation. So you have to be very careful. Yeah, total turnover has to be that of the SEZ. So students, in that regard, 24 is the answer. And now by virtue of this, let's take across your module question. Yesterday we were talking about the chapter in the module, isn't it? What is the page number? 10 AA? That module question. That is in chapter number 3. Three point 34. 3.34. Students, this is illustration. Let's look upon to this. 3.34. Y Limited furnishes you the following information for the year ended 31st March 2020. Total turnover of Unit A located in SEZ 100. Profit of business of Unit A is how much? 30. Export turnover of Unit A 50. Total turnover of Unit B located in DTA, how much is that? 200. Profit of Unit B is how much? 20. So students, Unit A primarily is what we have to focus upon. Computer deduction at 10 AA, assuming that Y Limited commences operation in 1617. So students, this is which year? 1617 was first year, 1718 second, 1819 third, 1920 fourth year. So this is the fourth year of the operation and therefore 100% of the qualifying amount, and in the qualifying amount will be the profit which is 30 into the export turnover of Unit A divided by the total turnover of Unit A. So I think it was the same question that we all did, isn't it? Same question. So can you get the answer quickly? In fact, students, the question is quite simple here, but at the same time, just the bit of this thing, can I modify this question herein? Let me modify, students, here the question in this case. Let me modify, otherwise this looks very simple and raw question. So here, if in the above question the export turnover include rupees 5 lakhs towards insurance and freight charges and only 80% and only 80% of the export turnover has been realized within 6 months, then calculate the deduction under section 10AA. This is the question. Quickly, students. Get your answer on this. All of you will ensure to give me the answer on this one. Raghavan, Ajay, Priyanka, now see the differences coming in your answers also. So this can be a bit of twist that can be given to you in the examination, compelling you to make some errors, compelling you all to make some errors in this regard. Okay. Priya. DSP. So all of you are through with this now. Last 20 seconds. Pavan. Chandana. See, all the students, now you are getting a separate answer. So now with this, I think more or less all of you are through with this and your solutions are also ready. So here in students, considering this particular answers now, as I was telling you, first of all 100% would be the amount. So there is no doubt about that. Profit also will remain the same, 30 lakhs. What will change is the export turnover now and the total turnover. Now students, herein, if you see the accrued export turnover, the accrued export turnover is 50. Out of that 50, 5 is what? So 50 minus 5, 50 minus 5 in this case, isn't it? And the balance, can we say this is also 50? If domestic export turnover, if it is A 50, then the domestic turnover, can I say it is also 50? Yes. But if I say that in this 50 of export turnover it includes 5, so I will reduce 5 and then I will add the remaining 50. Okay, so that is how it will be considered, because as I told you, this will be on the accrual basis. The denominator would be on the accrual basis. Fine. Let's come to the numerator. Realized is how much, students? 80%. So 80% will mean what? You will have 45. I can say, can I say this is the 45 is what I can say easily is your pure export towards the goods. Your pure export towards the goods, and of this pure export towards the goods, only 80% has been realized. Oh, the pure export towards the goods only. You can also do a lengthy way also. What is the lengthy way? Take 80% of 50 and minus with 80% of 5. Take 80% of 50 and minus with 80% of 5, the answer will be the same. Or better way would be directly take the net 45, which is purely for the goods on accrual basis. Take 45, which is net purely on the goods on accrual basis, and of that goods turnover you will apply 80%, which will give you what? That will give you the realized portion of the turnover in respect of the goods. Realized portion of the turnover in respect of the goods. So therefore, students, here the final answer would be, what is the final answer in this case, students? If you now tell me 30 into this 45, 80% of the 45 in the numerator, and the denominator would be 95. This will give you, get me the final answer quickly. $11.36. 11.36. So this is how you will have to deal with it in terms of the solution. Okay. Fine, students. So students, this is the way you will calculate your the answer, which would be 11.36, and that is how the things will be proceeded. I hope that all of you have got hold with this point. Please don't make any error, because ICI module has presently got presently very simple question, but the concept of this exclusion of freight, exclusion of all these 3 charges which we have discussed, that concept is there in the module. They just need to do this kind of a twist, which I have done it in the question, and that will serve the purpose. Okay. So that is one thing which has been there. Now students, apart from that, this 14A, I'll just quickly read it for all of you. Simple logic, students. This can be there for MCQ. Since we are doing this, I'll just touch upon this also here, because it's a very off track thing. 14A. What it is students, nothing but an expenditure in relation to an exempt income, students. Just this much you have to read. Expenditure which is in relation to only this much. For MCQ purpose. expenditure in relation to exempt income, that will not be allowed to you as a deduction. That will not be allowed to you as a deduction. This is what this particular point is all about. So supposingly I have taken a loan for the purpose of investing in the share so as to earn dividend therefrom, and the dividend for me is fully exempt, then in that case whatever is the interest expenditure which I'm incurring on that loan amount, that interest expenditure would be fully disallowed. Is what this section 14A is all about. Priya, why we subtracted from total turnover? Because in total turnover export turnover is there. In total turnover also, if you see in the chart itself, we have done it. In the chart itself, if you see here it, what was there in the chart? Even the total turnover we have to exclude. Exclude what? Telecommunication charges, freight and insurance. Total turnover will comprise of export turnover and the domestic turnover, and therefore in that regard we will have to exclude the freight charges, insurance charges. But the very fact that these freight and insurance charges, the very fact that the export turnover in the total turnover is on gross basis, the export turnover in the total turnover is on gross basis, therefore this freight and insurance has to be excluded, on the gross basis. So this freight and insurance has to be excluded on the gross basis, and that is the reason why from 50 I have minus 5. But when it came down to my export turnover, that I have to reduce only on the realized portion, which was 45. On that I have taken 80%, which is the realized amount. So I hope that this query is sorted out in this regard. With that, now let's try to take the things forward. AMT, students, is our next concept, which we will now discuss quickly. AMT, alternate minimum tax. Alternate minimum tax, students. Now this is in final CA, students. You will also learn MAT in IPCC of 2 settle with AMT. This is applicable for a non-corporate SSC. Applicable for non-corporate person other than company. Non-corporate means other than a company. Fine, students. Now what is the situation for this other than a company? So students, the point goes like this for them. Now they will make two workings. So here step 1, computation of the total income and the computation of tax liability as per the normal provision of the Act. So whatever is the, you all know the way we do the total income computation and the tax liability, whatever is the normal provision that we apply for the computation of the total income and the tax liability, that is how we will deal with it. So it's like herein compute total income. So we'll compute the total income, fine, and then thereafter calculate the tax on such total income. Calculate the tax on such total income. How you will calculate a tax on such a total income? So the tax that will be calculated will be on the normal income at normal rate, not here, I'll write on the special income, on the special income at special rate of tax I can give an example like lottery winnings. Which is 30%. Short-term capital gains of 111A, say 15%. And say LTCG of 112, say 20%. These are all like some of the example of the special income. So on special income, you apply the special rate of tax, and then on balanced total income, which is, sir, how do we get balanced total income? So balanced total income, students, you get by the total income minus the special income. Total income minus the special income. So that is the balanced total income as per the rate applicable to the person. Like individual, we all know slab rate. Individual HUF, they have got a slab rate. For a partnership firm, students, the rate is 30%, isn't it? So whatever is the rate which is applicable to the person. So get that thing. Thereafter, take the subtotal. Then add surcharge if applicable. So there is also the if applicable. That depends on it depends on if the total income exceeds the threshold amount applicable to the person. Threshold amount applicable to the person. So the total income exceeds the threshold amount applicable to the person. Then in that particular case, the surcharge would be applicable. After that, you will take a subtotal, and from that subtotal, you will put the HEC at 4% in this case, and file your tax liability. Students. Fine. Finally, your tax liability is what you are going to get it in this regard. This is your step number 1. In step number 2, primary. In step number 2, you will have to calculate the adjusted total income, students, and AMT, alternative minimum tax. First, you calculate the adjusted total income, and then the AMT. Now, what is this? How do you do the adjusted total income? It's very simple. Adjusted total income, students. Now, from this, in this regard, say particulars, amount, 3 column may be required, and amount. So whatever is the total income in your step 1, you will put this, add to that point number 1, the profit link deduction under section 10AA or ATIA, ATIB. This ATIA, ATIB is not there right now in your syllabus, but 10AA is there, so at least you will deal with this 10AA. Put there. The second one, the deduction net, right, like this, net of deduction under section 35 AD. Now you will how do you calculate net of deduction under section 35 AD? This will be calculated as the deduction under section 35 AD, whatever amount that you have claimed, and from this deduction you will minus what? From this deduction you all are going to minus the notional depreciation available if the deduction would not have been taken. So same thing, students, if you remember the deemed income, the way we have prepared a deemed income yesterday in 35 AD, the same thing, the way we have mentioned the deemed income under section 35 AD, on the similar lines you will prepare this notional depreciation, and then you will reduce this notional depreciation, you will reduce this notional depreciation from that deduction, and that net deduction that is there, that is what will be added, and accordingly these two add. One is the profit link deduction and the net deduction of 35 AD. This will result into adjusted total income. And students, thereafter what? The AMT at the rate of 18.5%, students. Now, students, it may so happen that in your adjusted total income there are special income which is already included. It may so happen that in your adjusted total income there are special income which is already included, but you will be having the AMT only at the singular rate of 18.5%. But you will have the AMT only at the singular rate of 18.5%. So that is one thing that we should always bear in mind. The AMT will always be at the singular rate of 18.5%. Unlike while I calculated above, the normal tax liability, there I have told you that if in my total income there are some special income for which I have given you the example over here, then that special income will be at the special rate and the balanced total income will be at the rate applicable to the person. That is how we have calculated tax. But here, students, we will not discriminate whether in the adjusted total income there is a special income or there is a normal income. Whatever be the income, there is only one rate that will be applicable, and that is at 18.5% is what you will apply. Okay, now on that you will add the surcharge. Here, students, would be, that will depend upon, now if you will substitute instead of total income, you will substitute with this adjusted total income, students. This will get completely be substituted with the adjusted total income. So what you write here, if the adjusted total income exceed what? If the adjusted total income exceed the threshold for surcharge. The threshold is the same. Whatever is the threshold applicable for the total income, the same threshold is applicable over here. So on that basis you will apply the surcharge, and thereafter, students, take the subtotal and then HEC at 4%, and finally your AMT. Now if the AMT calculated here exceed the tax calculated in step 1, then the then the liability of the person for the relevant AY shall be the AMT calculated above. Good morning, Edwin, Pramnath. If you're all through with this, do let me know. Through this, student. Prasad, why step 1 and step 2? Because in step 1 I am calculating the tax as per the normal provision, and in step 2 I am calculating the AMT, and then finally I am doing the comparison. Comparison of what? The AMT which I have calculated in step 2 compared with the tax as per the normal provision which I have calculated in step 1, and whichever is higher of the two amount will be the final tax liability above in this case. Fine, student. Now here, students, in this very case, can we therefore say that if I have claimed deduction of 35 AD, or if I have claimed the profit link deduction, only then the AMT is applicable? And the answer is yes. So you can just write herein because the highest of the liability would be applicable, Priyanka. If the AMT calculated here is greater than the tax calculated in step 1, then the highest liability would be applicable to the SSE. Highest liability would be applicable to the SSE. Below this, students, you will take a note. The AMT is applicable. The AMT calculation in step 2. The AMT calculation in step 2 is applicable only if the AMT calculation in step 2 is applicable only if the assessee has claimed the profit link deduction under section 10AA, ATI, etc., or or deduction under section 35 AD or deduction under section 35 AD in computing RAY relevant assessment year in computing the total income full stop. Right in the next line. Therefore, if no profit link deduction or deduction to 35 AD is computed. Deduction of 35 AD is computed in determining the total income. Then calculation of AMT under step 2 would not be applicable. Calculation of AMT in step 2 would not be applicable. Full stop. So students, over here, as I was discussing with all of you, that these deductions only if you have claimed that you will go to step 2 for the calculation. Now Pradeep has asked that, sir, why we have to calculate AMT? What is the logic behind that? So the logic behind that, students, is that as we have discussed, the deduction like 35 AD or the 10AA deduction wipes out a substantial chunk of your income. Wipes out means eliminate a substantial chunk of your income from the total income, and thereby substantially reducing your tax liability, and therefore to ensure that the liability which you have reduced in that year is reconciled to minimum AMT, to a minimum amount which is known as alternate minimum tax. This liability which you have reduced heavily by taking the deductions like 10AA or so, or by taking the deduction like 35 AD or so, so that reduced liability is reconciled to AMT. What is that AMT? At least this much minimum tax you have to pay for that particular assessment year is what is the concept behind the introduction of AMT. You have to pay this much minimum tax. That is known as alternate minimum tax. And this is applicable for all these SSE who has claimed what? The huge deductions in the form of 10AA or 80IA or even 35 AD. And that is why we actually have to calculate the AMT as far as our tax liability calculation is there. Shall we substitute numbers in step above? Substitute numbers means we will do a question itself herein. Now students, in this context, just first we will look into our charts if there is any theory which is there on AMT, and then we will look into this one. Students, in this regard, See the applicability part. So if you have a look over here, so this point number 2 is very important. In this point number 2 is very important for the theory. Students, in one case, just be careful. In one case, even if I have calculated, I have taken the deduction of 10 AA, or I have taken a deduction of say 35 AD, still AMT will not be applicable. That is only one case, students. Again I am repeating. In one case where I have not taken any deduction of section 10 AA. Sorry, I have taken the deduction of section 10 AA, or I have taken the deduction of 35 AD. Still what? Still I will not be liable for AMT, and that case is when my adjusted total income, students, when my adjusted total income, which has been there over here, if you have a look in this context, if the adjusted total income does not exceed what? 20 lakhs. Does not exceed 20 lakhs. So if my adjusted total income, how do you calculate adjusted total income? By adding back 10 AA, or by adding back the net 35 AD. So if by adding back these two, still my adjusted total income is only up to rupees 20 lakhs, in that case we will say that the AMT is not applicable. In that case, students, we will say that the AMT is not applicable. Did you all got this one? In this case, so herein, students, if the adjusted total income is up to 20 lakhs, even by adding this 10 AA deduction, or by adding the net 35 AD, the net 35 AD amount, still it does not cross 20 lakhs, then we will say the AMT concept will not be applicable. The AMT concept will not be applicable. But can you see the next line which I have made you write over here in the notes? However, the above relief is not available for a firm. So what do you mean by for a firm or LLP? So for a firm or LLP, even if what? Even if by adding back 10 AA, or by adding back the net 35 AD, even if it is less than 20 lakhs, it does not go beyond 20 lakhs, still whether the AMT will it be applicable? And the answer is yes. In that case, students, the AMT will be applicable, and that is exactly how it has to be considered. So I hope that all of you have got hold with this particular point, students, now. Okay, with this now we will take into account a practical question straight away, so as to just clarify this concept. I think all of you are saying, what is the page number in the practical question? 8.47 if I am not mistaken, in your module 8.47. In your chart, students, if you have already taken the hard copy of the chart, always keep referring in the chart the practical questions which you are going to refer from the module, or from whichever notes which you are having it. So that will become easier for you quickly to keep on switching over, and this will expedite your last minute revision. Let's take across then. Eight 8.47. This is a question. Let's see. Very good question. Mark this to be important. You will straight away get the same question. Mr. X, an individual, set up a unit in SEZ in the financial year 15-16 for production of washing machine. The unit fulfilled all the conditions of Section 10AA of the Income Tax Act 1961. During the financial year 1819, he also set up a warehousing facility in a district of Tamil Nadu for storage of agricultural produce. So last year was the first year. Current year is year 1920. It fulfills all the conditions of Section 35 AD. Capital expenditure in respect of warehouse amounting to rupees 75 lakhs, including cost of land, is rupees 10 lakhs, but the deduction would be only up to rupees 65 lakhs. The warehouse became operational in the current year. So we have seen, students, in 35 AD that if it is in relation to the pre-commencement expenditure, then the deduction of 35 AD will be available in the year in which you have commenced your business. And 75 lakhs was capitalized in the books of accounts as on that date. So we will get deduction of rupees 65 lakhs. Minus the 10 lakhs, we'll get deduction of rupees 65 lakhs. Relevant details for the financial year 1920 are as follows. Profit of the units located in SEZ, export sale of the above unit, domestic sales of the above unit, and the profit from the operation of warehousing facility before considering this one. So we have got, students, herein the profit is how much of the warehousing facility? 1 crore 5 lakhs. From this you will minus what? You will minus the 65 lakhs, which will give you 40 lakhs of PGBP from warehousing. Similarly, PGBP from SEZ, you will have what? Already given to you 40 lakhs. From 40 lakhs, you will minus what? 10AA deduction. You will calculate a 10AA deduction, you will minus this, and you will take it in the order column, the amount, and finally you will get what? Your total income. So this will give you the total income, and from your total income, you will calculate a tax liability, and then you will go for this. Start solving through the question. 5 minutes time I am giving it to all of you. Quickly do this and try to calculate all on your own now. You have to practice this once. 5 minutes time, quickly. All those students who are through with this, they will let me know. Chandana. So 10 deduction, students, you have calculated at rupees herein at rupees 32 lakhs, isn't it? Thereafter, profit from the operation of warehousing facility 1 crore 5 lakhs. From the 65 lakhs, you have taken the deduction, and the business income of the warehousing facility, which is chargeable, is 40 lakhs. Total income is 48 lakhs, and computation of tax liability under the normal or regular provision happens to be tax on 48 lakhs, 12 lakh 52,000. Thereafter, HEC at 50,100, which you have calculated, and then total tax liability is 30 lakh 2,600. Adjusted total income, whatever. How do you go about it? Prasad, for companies, MAT is applicable. MAT, MAT. So here in total income as computed above 48 lakhs. Add to that deduction to section 10AA 32 lakhs. Thereafter you get 80 lakhs, and thereafter, students, that you, after you have added 10AA deduction 32 lakhs, you get the gross is 80. And then thereafter, students, you have the deduction of 35 AD 65 lakhs, but as I told you, what I have told you, notional deduction of depreciation would be reduced, so that net 58 lakh 50,000, students. 58 lakh 50,000 is what? Is net 35 AD. That gives you the adjusted total income of 1 crore 38 lakhs 50,000, and thereafter you calculate the AMT on that 18.5% singular rate. Add to that the surcharge. Now see, students, over here, this is an eye opener. In my total income it was 48 lakhs, isn't it? And this is for whom? For Mr. X, an individual. If this would have crossed 50 lakhs by total income, then the surcharge would have been applicable. If this would have crossed 50 lakhs, then the surcharge would have been applicable. I'm talking about the total income. The surcharge would have been applicable in calculating the tax liability as per the normal provision. In calculating the tax liability as per the normal provision, if it would have crossed 50 lakhs, 10% would have been the surcharge. Okay, but that has not happened, so we have not taken the surcharge in the calculation of the tax as per the normal provision. When it came to the alternate minimum tax herein, the adjusted total income, because it crossed beyond a crore of rupee, we all know for an individual, if it crossed beyond a crore of rupee, the surcharge rate will then become 15%, and that's exactly what you have done. 15% happens to be the surcharge rate. Add to that the HEC, which is at 4%, and finally you get the total amount. Finally you will get what? The total amount, which is 30,64,451. So now you compare between 13 lakh 0 to 600 versus 30,64,451. Obviously you will go with what? 30,64,450. Now there is a concept of AMT credit also. Even this can be targeted. AMT credit. What is this AMT credit? Students, this AMT credit also they can ask you. The fact that the SSC has paid an excess tax in this year. The fact that SSC has paid excess tax in this year. You will say, sir, why excess tax? Because his actual liability as per step 1 was around 13,02,600. His actual liability as per step 1 was 13,02,600, but he was forced to pay the tax as per AMT, which is 30,64,450. So he has paid an excess amount of tax, and the excess portion of the tax, which comes to 17,61,000, the excess portion of the tax, which comes to 17,61,850. That is what will be the AMT credit. Now you will say, sir, what is the use of this AMT credit? So students, AMT credit use would be in the any subsequent years up to a period of 15 years, 15 years, 1 5, in any subsequent year up to a period of 15 years, whenever the assessee will be liable to pay the tax as per the normal provision, the tax as per the normal provision, in that very year, he will be allowed to adjust the AMT credit against the tax which is determined as per the normal provision. So in any of the subsequent year up to a period of 15 years, any subsequent year up to a period of 15 years, if the assessee is liable to pay the tax as per what? As per the AMT, he will then be liable for what? Sorry, whenever he would be liable to pay the tax as per the normal provision, in that very year he can adjust this AMT credit against the tax as per the normal provision. So that is the purpose of this AMT credit. So AMT credit is generated in which year? This can be a question. AMT credit is generated in those years when the assessee was forced to pay the tax as per the AMT. Assessee was forced to pay the tax as per the AMT. That is, the AMT was higher as compared to the tax as per the normal provision. In those years, the AMT credit will be generated. How the credit will be utilized? So the credit will be utilized in the subsequent AY. The credit will be utilized in the subsequent AYs when the assessee's liability to pay the tax, will be as per the normal provision of the income tax. The assessee's liability to pay the tax will be as per the normal provision of the income tax. For how many years this AMT credit can be carried forward? So the assessee can carry forward this AMT credit for a period of 15 years, 1 5. 15 years, 1 5. Yes, Priyanka, that is applicable. Even that is applicable. But they will not ask you in that particular regard the question in the examination. You just revise this question, students, 2 times. All of you will revise this question for 2 times, and that is what you will all do. Fine, students. So we have done with one very important area which is there so far as your one. For sure, students, this question, one of those things, 10AA, either the independent question of 10AA or this AMT question. If this comes in AMT question, this will be anything at 8 marks. This question would be for 8 marks, students. Hope that it should come so that you get good marks in the same. Now what is our in the next list, students? Next list is all about the small deduction, students. All these small deductions. So I can write over here these small deductions. So all these small deductions. So one list of small deduction is this. One list of small deduction, students, is this. Another list of small deduction will happen from the next page. Yes, balance can be carried forward, Pradeep. So this is a small deduction 1, and what about the remaining part of the small deduction? So here is a small deduction, students. The remaining, this deduction, small deduction. General deduction is in 37.1. General deduction is in section 37.1. So let's quickly go through the small deduction. I'll do this particular part, and I want all of you to do, in fact, if possible, students, now all the remaining small deductions which is there and the disallowance. Please try to wrap it up quickly. Why is it so? Because then I will be in a position to do practical questions. Now all the big technical topic part of PGP is over. Now only the small things here and there are there. So what we will try to do would be, immediately we will try to come to the practical problems. Otherwise I'll not get stuck into this small deduction. But one part I'll do the small deduction with all of you. Other part, students, I'll give you as an assignment. Please ensure to go through them quickly and be ready for the purpose of your practical questions. The small disallowance and the disallowance 40AI, 43B, small sections are there. Go through them so that we can do the practical problems thoroughly. We'll quickly run through this particular part, students. Here 35D, amortization of the expenditure in the case of amalgamation or demerger. So what happens over here? So students, in the case of the amalgamation, there are a lot of amalgamation related expenditure. So therefore the amalgamated company will be eligible, the amalgamated company will be eligible to claim the deduction in respect of those amalgamation expenses, but the maximum deduction would be only 1/5 every year. So it means that 5 years you have to take the deduction for a period of 5 years. You have to take a deduction for a period of 5 years. So 1/5 every year. So that is one thing. Second, students, is about the VRS expenditure. Again, students, this VRS expenditure you will be getting in the year in which you have made the payment, and for the period of 5 years, students. So the deduction will commence only when you pay. The deduction will commence, students, in respect of VRS only when you make the payment. This is I'm talking about 35 DDA. This is I'm talking about what? The 35 DDA. Okay. However, here in this case, when you have made the payment, but the deduction would be only up to rupees 1/5. The deduction would be only up to rupees 1/5. This is what will be the portion of the deduction. So 5 years again you have to take a spread, and the deduction will commence from the year in which you have made the payment of the same, and the deduction will be for a period of 5 years. The next particular part, students, is 35D, which is about the amortization of certain preliminary expenditure. The amortization of the certain preliminary expenditure. Now, students, this is applicable for both a company and a non-company. Applicable for both a company as well as a non-company. For this, I'll just give you a note in this case. For this, I will give you a note in this regard. Preliminary expenditure. Preliminary expenditure. Complete syllabus covered in this session. This session means obviously in the series of session, not only in this session, in the series of our session. So students, here if you are a company, or I'll say non-company first. For a non-corporate, and for a company. And for a company. Again, this section you can write for MCQ, it is important. For MCQ. So MCQ would be here in for a non-corporate, the actual preliminary expenditure in the bracket I'm writing 4. I'm writing 4, students. You'll say, sir, from where you got 4? Don't worry, just give me 2 minutes, I'll let you know. So actual preliminary expenses 4, or 5% of the cost of project. whichever is lower. This is a qualifying amount. This is the qualifying amount. Whichever is lower, qualifying amount, and of this qualifying amount, 1/5. Of this qualifying amount, 1/5 students. 1/5. So far as the company is concerned, they have to do 2 steps. Step 1. Now, students, I'll write this as COP, cost of project COP. So this is 5% of cost of project. This will be compared with 5% of the capital employed. 5% of cost of project will be compared with 5% of capital employed. Whichever is higher will give you the qualifying amount 1. The qualifying amount 1, and this qualifying amount 1 will be compared with the actual preliminary expenses, and in that I'll write 4 plus 3. In that I'll write 4 plus 3, and whichever is this lower amount, whichever is the lower amount, this will be the qualifying amount of this 1/5. So step 1, for a company, 5% of the cost of project will be compared with the 5% of the capital employed, and you will take here the higher amount. In step 1, students, for a company you will take first the higher amount, and then that will give you the qualifying amount 1. That will give you what? Qualifying amount 1, and then that qualifying amount 1 will be compared with the actual preliminary expenses. Actual preliminary expenses, and that I have written is as 4 plus 3. Actual preliminary expenses, which I have written as 4 plus 3, and that we will just what is this 4 plus 3 and that 4. We will just switch to the chart and will let us know. So this will give you the qualifying amount number 2. This will give you students what? Qualifying amount number 2, and of this qualifying amount number 2, you will take 1/5. You will take 1/5 as the deduction. Okay, so in both the cases, 1/5 is the common thing. In both the cases, 1/5 happens to be the common thing, but this is what you will take into account. Let me in fact take you through. If you are all through with this, then we'll just do that in that chart quickly. If you are through with this, fine, students. Now if you see over here, students, we can just see here. This is 1, this is 2, market survey, engineering service 3, legal charges 4. So feasibility report, market survey, engineering service, legal charges. These are the 4 items. And for company above 4, above 1 to 4 and following. And what was following? ROC fees, printing of MOA. So this is again 1, printing of MOA and AOA 2. So ROC fee pays is 1, printing of MOA and AOA it is 2, and legal charges for enhancing the authorized capital, that will be 3. That will be 3. And this is what will give you, students, this is what will be giving you the deduction. Fine, students. Okay, so that is what it is, students, herein. and we have dealt with this particular part. Now what I want to do, students, we have to go to the practical questions. We have to go to the practical questions immediately in the next class. What therefore I will expect from all of you is this. I'll be doing the practical question, selected comprehensive question of module. Now while I do some selected comprehensive question module, at that time I will switch over. So 2 days we will try to now further invest and we'll finish it off PGP. 2 days more. Okay, so tomorrow and day after tomorrow, as much practice we can do it, we will deal with it. Now how I'm going to approach, students, I'll just let you know quickly. All these small deductions and disallowances and presumptive income sections, I'm not going to read theory. Theory is now to be read by all of you. So what you are going to read is chart number 12, all these small deductions which are being there. Thereafter the finance charges, this particular segment, that 3613, all these small deductions. It's only hardly one line. Then 37.1, students, 37.1. Okay, 37.1. That is chart number 12. That is chart number 12. In chart number 11, students, 30 and 31. Small deduction 30 and 31. Small deduction 30 and 31. So small deduction 30 and 31, which is in chart number 11. Then small deductions, which is there in 36 and 37, which is in chart number 12. So you can just write those chart numbers also. In chart number 11, what you will do? 30 and 31. In chart number 12, what you are going to do? 36 and 37. And then the disallowance part. Also, I want you to deal with it because it's a small disallowances. Chart number 15, disallowances. 40A2, 40A3, the cash expenditure, and then Rule 6 GD. Thereafter 40A7, 40A9, then 40AI. That part. Okay. Now, tomorrow and day after tomorrow, which I'll be touching upon certain practical questions. I will be touching upon the practical questions. At that time, practical questions, I will try to come back to this chart and I'll say, and I'll just move it like, okay, let's see this disallowance part and also this 43B. Students, 43B is also equally important. 43B. Where is 43B? This is 43B towards the end in the same chart number 15. Okay, so that would be on the disallowance part. That will be on the disallowance part. So that is what you will deal with it. Fine, students, and be ready for your tomorrow's session onwards, wherein I'll start with the practical question itself, wherever I have to touch upon to your chart for the small deductions. For these small deductions and all, that small deductions I am going to touch upon in the lecture. So this is what we are into it right now, students. Coming back to your chart which I have prepared for all of you. Herein. Coming back to the chart. Herein. Can you see this? All these small deduction. You just ensure to write the page numbers. This we have already done now. Disallowances. These are the sections. For this chart number, please ensure to do it. And your last segment then would be presumptive income 44AD. This thing I will do it with the practical question. With the practical question, I am going to deal with it. Did you all got this one? Fine. So your immediate task has to be the remaining small deduction and disallowance of these three segments. And that is how I'm going to touch upon and keep your module ready tomorrow on the PGBP. Tomorrow and after tomorrow, we'll close this particular topic now. Okay. And then we will switch to capital gains. Our next topic would be capital gains. Fine, students. Any queries? Say, students, fast. Disallowances, that's why I said it. Disallowances I will be touching upon through the practical questions now. All these other small sections and the disallowances, I'll do it through the practical, because now this, you don't have to read theory, you need to know how to apply. For theory the charts are there, but more important is that how do you apply in the practical questions. So that is what you will be getting it in the practical questions itself. So let's try to do it in the way you are going to get it in the examination. All these small sections and the disallowances, the way you are going to get it in the examination, that is how we are going to touch upon in our next two class. Okay, so that would be the idea, so as to get you a good grip over the same. Yeah, that is what I said. No, the practical problem that I'm going to do would be from the mat only, study mat material. From the study material only I'm going to do. So tomorrow and day after tomorrow, keep your study material ready, because whatever is there in the study material, on that basis we are going to touch upon the questions. Tomorrow also, students, at the same time, 10 o'clock, 10:15 will be up for the tomorrow live session. Okay, so see you then tomorrow, students. Fine. On the 9th particular session, we'll try to wrap it up. See you then, students. Thank you, Priyanka. Thank you very much.